Welcome to Turning Hard Times into Good Times. I am Jay Taylor, your host, and I'm talking to you from the borough of Queens in New York City. This is the 8th day of February 2022. And we do want to thank all of you for listening to this show and making it one of the more popular shows in the Voice America Business Channel. Also, invite you to continue sending along whatever comments you have about this show. We'd like to hear from our listeners. Also, I do want to thank our sponsors. They are the ones that make this show economically viable. Novo Resources, Aloro Resources, Hannon Metals, Irving Resources, Lion One Metals, SK Mining Corp, Firefox Gold, and Timberline Resources. Well, many of you are avid fans of Michael Oliver, who is not with us today. So before I talk about today's show, let me just say that Michael's weekend missive, in that missive, he demonstrated that if gold can close out this week at a price above $18.12, there will be no need, from his point of view and from his work, to remain cautious and to pose a cautious trading strategy with respect to gold. Now, shortly before showtime, I checked the markets, and the cash market was $18.28. But, of course, there are 3.5 days left this week, and we know how quickly the major bullion banks can slam the price of gold down by 20, 30, 40, 50 bucks, but just by throwing huge amounts of futures contracts into the market. So we'll hold our breath and keep our fingers crossed for a rise in the price of gold over $18.12 by the end of this week. I've titled today's show, Helping President Biden Understand Inflation. Alistair McLeod, Quentin Henning, and Chen Lin are this week's guests. The Keynesian religion has been taught to every college student in America and Europe in recent decades. But that religion is based on lies such as you can consume more than you produce and get rich by doing so, or capital has no time value. Since getting rich without working is widely appealing to human beings, the very opportunistic President Nixon removed gold from money and declared, "We are all Keynesians now." By so doing, he paved the way for an American debt-funded spending orgy that only now is leading to an exponential rise in consumer prices and interest rate increases that will inevitably follow suit no matter what the Fed does. It is certain to send us into some very serious economic problems no matter what the Fed does. Now, Austrian economists counter the Keynesian religion, but actually the Kool-Aid drinking Americans and Western European policymakers do not. Hence, policies will continue to double down on the side of pathological practices that are leading the Western world to the precipice, I believe, of financial ruin. Alistair McLeod will explain why, given ongoing Keynesian policies, inflation and interest rates are inevitably headed to levels which, even if only moderately higher, are going to cause our existing monetary system a great deal of trouble. He will also explain why any legitimate reset of our present monetary regime will have to be grounded not on cryptocurrencies, which are, in effect, just another form of money, but rather on monetary metals. Now, Quentin Henning will be with me right after our first commercial break to update us on some very exciting new drill results from Lion One's Tuvato project in Fiji. These suggest a far larger, rich gold deposit than was initially envisioned by the company several years ago. Quentin will also comment on some very important news that came out just this morning for Lion One. But right now, I'm really happy to tell you that Chen Lin is with me once again to give us his thoughts on some of the key markets. Thanks for joining me, Chen.
Thank you, James. Glad to be here.
It's good to have you. What are your thoughts on gold?
Yeah, very, very interesting point. We are getting close to the Fed raising interest rate in March. Right now it's February. And I'm still a little bit cautious, even, your friend Oliver said, they may break out, because it's Ukraine situation, right? That's probably prop up the gold. I think the Biden administration probably trying to, push for a war so they distract the, people from inflation. That's I read. Okay, so I've been to Ukraine. I have a company invest in Ukraine. It doesn't look like going to break out, but of course our administration want to see it or at least distract people from. So I think that may be overplay. Okay, today you already see the palladium drop, so because the market already thinks there's no war. But anyway, so if that's coming, if Ukraine quiet down, then gold may take a little hit. I mean, that can come in the next few weeks. So obviously nobody wants to see a war there. So anyway, so that's my sense. So that's why I'm a little bit cautious. Plus, the junior market has been extremely bad lately.
Yeah.
But I'm still investing. Okay, I'm getting a big dividend check this week from Pan-Orient, and part of the money will be earmarked for juniors, right? So I'm already talking to a few companies, going to some pre-IPO, maybe some on the market. And so that's my take. I think because when the gold moves, I believe later this year when they move, it will be very quick. So for juniors, you want just a good project with good prospect, you're going to take a position and then hold on to the shares.
Well, I know, Chen, in the past how I felt. You sit in a dead market like we're in now for long periods of time, and then all of a sudden gold takes off, and you say, oh, man, why didn't I buy some of those shares when they were half the price they are now? Because they can go very quickly, as you know. The gold shares can also take off very dramatically. So we look for good projects with fundamentals, and, of course, we'll be talking to Quentin Henning in the second segment about one that I think is very good. But what about the biotechs, Chen? Might you employ some of those dividends from Pan-Orient into one or two or three or more of your biotechs?
Yeah, exactly. So I found that, biotech actually follow the Chinese zodiac very, very well. And last year, the beginning of the year of August was absolute peak of biotech and small cap. And I talked to a lot of people, a lot of fund managers, they all say that last year the Chinese New Year was the peak. And then the 1 year later, the year of Tiger came, the biotech index was cut in half, and 60% reportedly were shorted. So on the index, XBI. So it was so down so hard. I think it's a great opportunity. It's very hard to pick the bottom, but right now I believe, as I said in my newsletter, it's similar to the spring, maybe of 2002, maybe a spring of 2009, and spring of 2020. So it's one of those very darkest moments. And if you have a long-term view, you believe all these diseases need to be cured, and there's a bright future for biotech. I mean, this morning, Pfizer CEO said they're going to deploy their COVID money they hinted, they're going to acquire more companies. Reportedly, more than $1 trillion from Big Pharma are looking to buy biotech. So, I right now, because everything is done, I just looking for the best of the best. The company with, the drug with more than 1 billion sales potential, some with breakthrough that can change, the mankind as we know it. I invest in those. I put money in and put my chips in for 10-bagger or for other multi-bagger. And I have like 5 little tigers for me, 5 tigers for the year of tiger. We'll see. So, and then I think you followed Tricida and Amyris, all these of my 5 tigers. Two companies doing quite differently in the past few months. Tricida doing extremely well and almost tripled. I think it's still very, very cheap. Okay, consider with its potential to be the largest selling drug in the world. Okay, the CKD, that approval is next year. It's going to take some time, but the market cap is only 500 something, million. So it's very, very cheap. And Amyris, another stock I really like, and I hope it stay low. I'm going to get a big dividend check this week, and I'll try to add a little bit more. Because, if you look at Amyris, there is an article came out seeking offer that has extraordinary details of this company. Some actually is not public knowledge, but they say the board is considering share buyback. So I'm kind of wondering if maybe the people, large shareholder, are trying to push the share down before the March, early March earning. So that forced the board to buy back shares. Because last time they planned to raise $400 million, but actually they raised $690. With all the fees, whatever, they have extra $250 million. They announced they're going to build another plant in Brazil, $80 million. With all the inflation, maybe $100 million. So he has 150 million left, but he said he's going to expand to Europe, right? Likely he will build have a processing plant, production plant, processing plant, distribution center in Portugal, likely because the CEO is from Portugal. So that's maybe 50 million. I think, he has at least 100 million left. He can do share buyback if he wants to. So that's a key, and I invite people to read that article in Seeking Alpha, published last week in Amherst, carefully. I think that has a lot of in-depth information from Amherst. So I really like it. And then we discussed briefly before the show, its cash level, by my calculation after last raise, about $2.50, okay, maybe somewhere between $2 to $3. We'll see. So it's very hard to imagine the stock would drop that low, right, towards cash. So I think $3 and change right now is probably as good as we can get. So, so I'm quite optimistic, and I'm looking to buy more at this price. I hope it stays this, so I can buy more this month.
Yeah, Amherst selling at $3.97 just now. I saw on my screen, AMRS, and they're involved with synthetic chemistry, right? They're able to replicate molecules that are in nature without having to exploit, let's say, for environmental reasons.
They can get into the cannabis. They can do all this squalene. I mean, last time it went to $20. Why is it? Because he demonstrated he sells 3 molecules and they got 650 million, right? So it's like then they have 20 molecules and then 20 in the pipeline. So people can calculate they're worth quite a few billion. And right now it's still true. Even the stock is down to 1 billion. It's just a weird situation with all these market. As I said, I think a lot of biotech are so wiped out. Right now it's like the spring of 2009, 07, 09, 03, or 2020, spring of 2020 after COVID hit. Those are extremely depressed, the share price. So if you have any long-term point of view, you can hold the stock for a year. I think it's time to put your money to work. Right? So those are the 2 of my tigers. I'm very optimistic of them.
Those are 2 of your 5 tigers in the year of the tiger, I guess. That's why you call them your tigers. Just should mention that Tricida, TCDA is a symbol, trades at 1037 now. I just saw on my screen. Tricida is involved with creating a drug that is designed to, I think, slow down at least kidney disease, right? Isn't that what they're doing?
Right. For dialysis and kidney transplant, for all these very, very unfortunate people who have to go through that. And they are very unique drug, can reduce renal acid. They already demonstrate that. They try to apply for accelerated approval, and then the FDA say, no, you have to demonstrate it can improve. So they have this trial. They're going to stop in Q2 very soon, right? And then read out in Q3. So if they demonstrate, which I believe they will, if you read carefully the history of this background, is almost 99% chance of success. If they demonstrate reducing renal acid can improve the outcome, which is reduce people in kidney transplant, etc., and go back to FDA. FDA will have no excuse, right? So that's the beauty. And then it's a 60 billion market, 60 billion per year market, going to 100 billion in a few years. So they will be the only approved drug that cover the broad spectrum. You think about the upside. Right now, market cap still tiny, 600 million. So I think a lot of upside left.
Well, relative to the upside, the size of the market and the potential profits, I would imagine that's true.
Right. Because last year I picked up when I was trading at cash, and after I bought, I found Steve Cohen was buying. After then, the Baker brother was buying. All these well-known hedge fund was buying. So actually, the stock was doing so well in the past few months. One of the best performing biotech in the biotech wasteland. Right? It's biotech all crashed, but this doing well because the upside is so big that all these hedge funds, they can put like $10 million into this and then sit with it. So they don't care. The price is too low. So now we're getting to $10. I think we're getting interesting. We're waiting for the results in a few months.
Mm-hmm. And the probability seems very high. So, and I guess we're looking for the end of the year, maybe for some news on this one, right, Chen?
No, it's in Q3. So they will announce. They will have announcement this quarter about the stopping the trial. What time they're going to stop, and then next quarter they will stop the trial. The data, top line data, will come out in Q3. So we'll have a lot of movement of this stock in the next 6 months.
Okay, we'll have to leave it go at that. Chen, thank you so much. And folks, it's chenpicks.com. Chen just named 2 of his 5 tigers. There's another 1 or 2 I would have liked to have time to talk about, but there's no time today. But chenpicks.com, if you want to really catch up with Chen and keep up to date on a regular basis, go there and sign up for his letter. Thanks, Chen, for being with us.
Thank you, Jay.